Hi guys, welcome to my world. I'm Yoon. Today I'll show you guys a totally different topic that's about trading tutorials, and everything I'm going to share is based on my experience. I don't sell any trading courses, and selling trading courses that is not good or bad. It depends on the intention and purpose. So let's get started. When we go to the trading industry, we will have so many questions about money, time, effort. For example, how much money do we need to trade? How long is it going to take us to learn to trade? Should we become full-time trader? What is the truth about trading? Why is trading so difficult? What are the advantages and disadvantages when we become a trader? Before I answer those questions, I want to make you understand about trading first. I will explain about trading environment to help you understand the differences between trading environment versus social environment. From that, you can execute trading like running a business. And I want to make clear about speculation versus investment to help you understand about trading. What are differences between speculation versus investment? In speculation, we have short-term trade, and in investment, we have a long-term position. We actively buy and sell in speculation, and in investment, we minimize the transaction. In speculation, most traders use technical analysis or combined with fundamental analysis, psychological analysis, and in investment, we use foundation analysis. Financial analysis or foundation analysis is a process of evaluating business, projects, budgets, and other finance related to transactions to determine their performance and suitability. Fundamental analysis uses ratios and financial statement data to determine the intrinsic value of a security. Trading isn't about getting rich quickly, it's maybe about getting rich slowly. It's like a marathon. The very reason we are traded to trading is maybe the unlimited freedom of creative expression. It's like we feel a natural resistance to creating kinds of rules that appropriately guide our behavior. We also started trading because we thought that it was a way for us to get rich quickly, maybe become millionaires overnight. However, the more experience I've had in trading, the more I realized that is not true. What you don't seem to understand that trading is a profession. Pay attention to trading is a profession. If you wanted to be a professional golfer, it wouldn't be unusual to dedicate yourself to hitting 10,000 or more golf balls until the precise combination of your movements in your swing were so ingrained in your muscle memory that you no longer had to think about it consciously. When you're out there hitting those golf balls, you aren't playing an actual game against someone or winning a big tournament. You do it because you believe that skill acquisition and practice will help you win. Learning to be a consistent winner as a trader isn't any different. Not confronting mistakes in our everyday life usually doesn't have the same disastrous consequences it can have if we avoid confronting our mistakes as traders. We must take responsibilities in trading, despite the end results not blaming for the markets. Many people begin in trading with a very unrealistic concept about the inherent dangers in trading. However, the truth is, sometimes we can make some profits as a beginner, but soon enough we will end up losing those profits. And then, when we enter a losing streak, if we don't take our responsibilities and have commitment, we will know what to do and cause to lose more money. Some of us will end up quitting trading forever. I want to make clear again that trading is a profession. Trading has the appearance of something that should be easy to do, coupled with the possibility of making vast amounts of money and in a relatively short period of time. However, you must release yourself from it is going to fulfill your dreams because it's a big illusion. It will prevent you from becoming a successful trader. It will be a major obstacle, keeping you from learning how to perceive market action from an objective perspective. Our upbringing has programmed us to function in a social environment which means we've acquired certain thinking strategies for fulfilling our need and desires that are geared toward social interaction. Not only have we learned to depend on each other to fulfill the need and desires we cannot fulfill completely on our own, but in the process we've acquired many socially based controlling and manipulating techniques for assuring that other people behave in a manner that is consistent with what we want. The market may seem like a social endeavor because there are so many people involved, but they're not. If in today's modern society we have learned to depend on each other to fulfill basic needs, then the market environment, even though it exists in the midst of modern society, can be characterized as a psychological wilderness, where it's truly every man or woman for himself or herself. Not only can we not depend on the market to do anything for us, but it's extremely difficult, if not impossible, to manipulate or control anything that the market does. Now, if we've become effective at fulfilling our needs and desires by learning how to control and manipulate our environment, but stubbornly find ourselves as traders in an environment that does not know, care, or respond to anything that is important to us. Where does that leave us? You're right if you set up the proverbial creek without a paddle. So setting rules, plans, criteria, methodology, all those are so important in trading. If you have no any experiences in the trading industry, you are newbie, not having gone through so many ups and downs in this trading career. I know that there are so many scams. Be careful of people on WhatsApp, Instagram, Telegram, posting as financial advisor. There are a growing number of self-proclaimed financial gurus on the internet. They convince investors or traders deposit money into the trading account and they promise to generate warranted profit. However, they don't provide any value in return and they are trying to take money from you. When you are a newbie, your psychology will be affected too much by the external, so you must be conscious when hearing or surrounding yourself with people who say that the amount of money, maybe hundreds of dollars, thousands of dollars, that is too less, too small, they advise you to deposit more money. However, they just want to take commission in your deposit. They don't provide any value in return. And I know that there are so many people who talk about trading like it's super easy. They just wanna show off. The professional traders, they want to save energy. They want to protect the inner peace to see the market objectively. One thing you need to understand that you need to focus on the process of learning, on the process of working on yourself. Focusing on learning will help you to become better, not only in knowledge but also in psychology. A common mistake is that new traders that they focus on or they obsess about their profit, proving their analysis is right. They are not willing to learn, take, and manage risk. They want to get rich quickly or have a holy grail. Learning to trade is a lifelong journey, and every trader's journey is unique. There are many things you have to master beyond knowing when to enter and exit a trade. Trading like running a business, because in running a business there are expenditure, and in trading there are also losses. Losing can be good if you want to trade for a long term. You must change the way you think about losses. Trading is a business, and every business has expense, so you must treat your losses as business expenses. Best traders learn from losses. Every trader knows that losses are the part of trading. There are good losses and bad losses. It depends on how you execute your trade. It's about capital management, risk management. If trading is easy, by spending a little time trading, you can earn money forever. That's all nonsense. If that were true, there would be so many professional traders multimillionaires, billionaires in the world just ordering to buy or sell in the market. You should focus on the process of learning. Focus on yourself, not obsessing about profit. Why are setting rules, plans, criteria, methodology all those so important in the trading environment? Because the market is an unstructured environment. In this environment, prices are in perpetual motion, with no defined beginning or ending. There is unlimited potential for profit and loss. As traders, we must set up some principles in trading. This may be about technical analysis, psychology. For example, don't expect too much. Don't trade without stop loss. Don't trade without stop loss. This may be the most important principle in trading. I will explain more about stop loss in the next part. It's technical analysis. And I just explain shortly here about why we shouldn't trade without identifying stop loss. Why we shouldn't trade without identifying stop loss? Because there is unlimited potential for profit and loss. In any particular trade, you never really know how far prices will travel from any given point. If you never really know where the market may stop, it's very easy to believe there are no limits to how much you can make on any given trade. When I say about the unlimited profit, some people will have illusion that their trade had potential of fulfilling their dream of financial independence. You should eliminate expectation about it. When you keep dreaming of it, you will have the tendency to gather all the kind of information will confirm and reinforce your belief. You can't see the market objectively. And when you are in a losing trade, the market could be moving far away from your entry point, increasing your potential loss by the moment. If you are not able to admit when you're wrong, the loss may become bigger. Even you will quit trading forever because you probably won't have any money left to trade and you may think the market is full of pain. And the second reason is prices are in perpetual motion with no defined beginning or ending. Professional traders always say that only trade with the amount of money we can afford to lose. In this trading environment, you need to understand you don't need to know what happens next in order to make money. You will not win every trade. You cannot predict an outcome. You will not find a perfect system. You can profit uncertainty. Here are some personal traits of successful traders. They focus on the process and review the outcome and trading performance. They have a strong sense of personal responsibility, persistence, effort, ability to change, self-discipline, be patient, etc. People aren't born with self-discipline. Being born with discipline isn't even impossible. However, as a technique to be used in the process of personal transformation, anybody can choose to use self-discipline. The more experience I've had in trading, the more I've realized the importance of working on yourself. And in the Super Trader book by Van Tart, the author also pointed out that work on yourself is one of the 5 steps we must take to have consistent profits as a trader. First, work on yourself and your personal issues. Secondly, develop a business plan as a working document to guide your trading. Next step is developing several strategies that fit your view with the big picture and understand how each other of them will perform in various market types. Thoroughly understand your objectives and develop a position sizing strategy to meet them. And the last step is monitoring yourself constantly and minimizing the number of your mistakes you make. But to work on yourself, this step has to be done first in order to your personal issues will not interfere with each of the other steps and will not affect your trading results and performance. You are the most important factor in your trading, so spend time on working on yourself. That's so necessary. I am a consistent winner because 1. I objectively identify my edges. Next, I predefine the risk of every trade. 3. I completely accept risk, or I am willing to let go of the trade. I act on my edges without reservation or hesitation. 5. I pay myself as the market makes money available to me. I continually monitor my susceptibility for making errors. And the last, I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. In technical analysis, we can use the process of consistent traders in trading in the zone book. In the first step, that I objectively identify my edges. So, what are edges? An edge is nothing more than an indicator of higher probability of one thing happening over another. Besides, wait for confirmation. One of my rules is that I want to put my entries where the masses put their stop, and I will buy the level most traders put their stop loss. Of course, I will wait for confirmation based on my methodology. If you don't find your edges, if you don't get in good level, it's very a risky trade. There's always an optimum point at which the possibility of a trade not working is so diminished. Remember, there's no perfect system. It's not right or effective for all kinds of market all the time. The next steps of the process of consistent traders, I predefine the risk of every trade. I completely accept risk, or I am willing to let go of the trade. I act on my edges without reservation or hesitation. There are also some rules or principles in stop loss to help you understand more about it in trading environment. The first rule is before entering into any trade, it's crucial to define what a loss would be in each potential trade. The second rule, as soon as you realize you've made a losing trade, it's important to act quickly and execute it right away. In the first rule, we have to understand why it's so crucial to confront the possibility of a loss, and it's so crucial to have a strong determination to predefine your perception of a loss. Why is it so crucial to confront the possibility of a loss? Because trading is not about getting rich quickly. Trading like running a business. And you have to have a mindset to think in the probabilities. Knowing the risk and accepting risk are two different things. Most traders erroneously assume that because they are engaged in the inherent activity of putting on and taking off a trade, they are also accepting that risk. Accepting the risk means accepting the consequences of your trades without emotional discomfort or fear. The first loss is the best loss and the cheapest loss. It allows you to examine the market from the sidelines. If the risk is acceptable, then take a trade. If the risk is high, reduce the stake amount. If both of them are not acceptable, ignore trade. Losing can be good. If you want to trade for long term, you must change the way you think about losses. Trading like running a business, and every business has expenses. Best traders learn from losses, and every trader knows losses are the part of trading. Not every loss is bad loss. There are also good losses. Your methodology has to tell you exactly how much you need to risk to find out if your trade is going to work or not going to work. Based on my experience, when I have more experience in trading, I realized the importance of position sizing and minimizing the mistake. What happens when you don't follow your rules? You make a trade when your system didn't tell you to trade. You're supposed to get out when your stop is hit, but you don't get out. Your position sizing is too big on one particular trade. Those are all mistakes, and mistakes can be very costly. Thinking probabilities or probability mindset are so important. I used to explain it on my YouTube channel, and I just explain shortly here in this video. What does it mean to think in terms of probability? First, anything can happen. Second, you don't need to know what's going to happen next in order to make money. 3. There's a random distribution between wins and losses for any given set of variables that define an edge. For an edge is nothing more than an indicator of higher probability of one thing happening over another. 5. Every moment in the market is unique. Now we go to psychology. Psychology is very important aspect in trading because every aspect in trading requires mental state, mental strategies. They are purely psychological. So it's hard not to conclude that everything is psychological. In Super Trader book by Van Tarp, the author also pointed out you are the most important factor in trading. But majority of people totally ignore you factor in their success. So the best thing you can do to improve your trading performance is to find out how you are blocking yourself. The first step in the process of creating consistencies is to start noticing what you're thinking, saying, and doing. Why? Because everything we think, say, or do as a trader contributes to and therefore reinforces some belief in our mental system. Your first line of defense against committing a trading error is to catch yourself thinking about it. Of course, the last line of defense is to catch yourself in the act. If you don't commit yourself to become an observer of these processes, your realizations will always come after the experience, usually when you are in a state of deep regret and frustration. For a trader, winning is extremely dangerous if you haven't learned how to monitor and control yourself. You must monitor yourself constantly and minimize the number of mistakes you make. And I define a mistake as not following your rules. Observing yourself implies doing it without judging about yourself. Emotional resilience is the ability to be calm or adapt to stressful situations, or dealing with life's ups and downs or unexpected situations. Emotional resilience belongs to emotional intelligence. Of course, emotional resilience doesn't eliminate stress or difficulties in life. It allows you to accept problems and move on with life. Resilience is an essential part of all careers. It's defined as the ability to recover quickly from difficulties. In trading, it contributes to long-term success in trading. Making mistakes, that's normal. Even for the best traders do. If you have a bad trade, you have a big loss, and you want to learn from it. You want to use losses, make you better. So you are treating losses as learning experiences. Ask yourself some questions. What have you learned so far about trading and yourself? Which markets do you prefer to trade? Does your plan fit in with the market? How do you execute your trade? How do you handle loss? How do you handle a winning trade? Are you patient and disciplined? Why did I ask the question, what have you learned so far about trading and yourself? Because understanding about yourself is synonymous with understanding about the market. You are the product, collective force that moves prices. Firstly, you must understand the inner forces that affect to your behavior, and then you will begin to understand the dynamics of group behavior. You could perceive other traders from how they do and the reason behind their behaviors. When you attain some degree of control over yourself, you can see then how other traders are not in control of what happens to them. Then it becomes much easier to understand the group's behavior, anticipate what they're likely to do next, and take advantage of it to the best of your ability. What can you learn from your biggest loss? What is your relationship to money? What have you planned and scheduled? How will you reward yourself? Every market has own behavior and volatility, so you must know your style in trading to create plans, mental strategies, everything to help you become a better trader, a professional trader, a successful trader. The past and the future also affect to your psychology and trading performance. So ask yourself questions and answer them honestly. Thank you for watching my video. I hope this video will be helpful for somebody who need it. And I want to say I'm really sorry because English is not my first language. So the expression in this video is really not good. I will do it better in the next time. Thank you. Bye bye.